Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, August 17th. We are looking at Window Traders market profile of the ES and SPY. So a couple of things. Beginning around August 10th was the first time this year that all three time frames in the S&P were up monthly, weekly, daily. Right now, the bears are trying to put an end to that as they're trying to put the daily back into balance. So it lasted for not too many days. We had 5 days in a row, one-time framing. We've had 2 other instances this year where we one-time framed up 6 days in a row. Now, again, it's still pre-market, but if we take out yesterday's low, we would come into balance. Russell right now, same thing. If they take out yesterday's low, comes into balance. Now, let's keep in mind something. Let's go to Qs first. Qs already were in balance yesterday because they took out yesterday's low. So they were in a 2-day balance. So if Qs come out of this, taking out yesterday's low, you could actually consider the daily down on the triple Qs. And then we'll see how much damage they do. As far as the ES and SPY, let's keep in mind, right now, initially it'll be a 3-day balance, whatever today's opening is, and then Monday and Tuesday. But even if we came in $10 today, all it is in balance. Markets don't go bull bear. So it would just be a matter of how many days of balance it would be. If we get accepted into the 12th pretty good, it becomes a 4-day balance. If we get down below the 11th, it's a 5-day balance on the first try down. So just please keep that in mind, okay? You have so many people on Twitter and other social media platforms calling for the market to just roll over. Somebody said, I'm looking for, this is last night, a $10 gap down, this and that. Guess what? Somebody else said, I'm long since the end of July, and I'm staying long to all-time highs. Guess what? They'll probably both be right at some point. It's a matter of context and a matter of your time frame. So here we try to give both sides as to what the market can probably do or possibly do, because it's all about probabilities and odds. SPY overnight high right now is 429.99. The overnight low is 426.01. You do have the Fed minutes out at 2 o'clock. Obviously, we talked about this. Both the weekly is definitely getting stretched out. This is week 5 of one-time framing. The daily has been one-time framing up. We're below that trend line, which I'll show you in a minute. This is healthy. I thought we would get this yesterday when we one-time framed down in B and C and took out the overnight low and the IB low, only to have that ridiculous move to the upside with 4 sets of single prints, wipe it all out, and then take the market right back up. So you can see how the respect that short-term algorithmic and retail traders we need to have for them is incredible, right? We really do. Ranges have been good. Volume has been horrible. So what's the game plan for today? Okay, if we gap lower and the gap is $1 or less, you can certainly take a short against yesterday's low and use that as your out. If the gap becomes too large and we gap closer to Monday's low, I don't think I'd be looking to take a short at that point. Why? Because initially it's going to be a 3-day balance, and we see if we hold it. The larger the gap, right? People scream gap rules apply. You know how I feel about that. Balance is so much more powerful. Balance rules are so much more powerful and inside day and month rules than gap rules. So the gap is $1 or less. It's a good risk reward against yesterday's low. The gap gets too large, I'm not looking for a short at that point. In fact, if we hold Monday's low, you could take a long against it, even though you'd have lower value, and then use Monday's low as your out, and then see. Remember, we had 7 single prints on Friday. ES took back 4 of them. SPY took back 3 of them. That's still there that day. Again, I have no problem with the market coming into balance. So those are early plays, okay? A lot can happen. And then again, prior to 2 p.m., not really worth having a position on because you know the algorithms. Those minutes coming out, that's old news. Think about it. We've had a lot more economic data come out since then. So no matter what they said in those minutes, we don't have the last 3 weeks worth of, or 2 weeks, whatever it is, of data coming out of their mouths. So it's a useless number, yet the algos will react to it. Please be careful. Again, if you're in this room, you're going to be getting these updates throughout the entire trading day while the profile's being live streamed. And then just quickly on the chart. So here you go. Look at the way they've been riding this trend line. We got below it on August 9th, and then the next day we had that huge gap above us. Remember, I said yesterday there were three possibilities what this market can do. Continue doing what it's doing and take out May's high and try to get acceptance. Well, they did take out May's high, but remember, one day doesn't make a market, either above it or below it. They certainly have not gotten acceptance above the May's high, which is critical to me in the S&P. So now we're attempting to stop the one-time framing and get below this trend line. Again, one day doesn't make a market. We'll be coming into balance. If the bears are really serious, then after today's action, if we do close below this, now they want to follow through to go from bull, today balance, and then possibly to bear. That's how markets work. Good luck trading today. Thanks for the likes and subscribing, and we'll recap at 4 p.m.